Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. It's great to be back during these trying times.
I was going to say it's that Chinese curse, may you live in interesting times. Gold today taking roughly a $25 drop. So it's below $1,600 an ounce, and I know just a month ago we were talking about, is it going to hang around $1,700? So what does this mean to a person who might be a little edgy right now? Is this a time where you should have a lesson on how to not to panic when other people might be thinking about dumping shares?
I believe so, and if you look at the writings of Frank Holmes and others, what we're seeing now is a 2 standard deviation away from the normal trading mean for both gold in terms of the price of gold and the mining stocks themselves, and that only occurs about 2% of the time. So I would argue that this is an opportunity for people to do their research, understand themselves and understand their big picture, and ask themselves if that is still reliable, if they feel it is, and then once they've done that research, to consider acting upon the conclusions that they're reaching.
So, analyzing what's happened here, a good chance to maybe pick up some bargains? Definitely.
And I think there's a framework that really is helpful to use, and this is the framework that I like to use is called the Boyd cycle. John Boyd, who was the man who wrote the first combat air manual for the U.S. Air Force, and he was an individual who actually helped birth the F-16 and F-18 light fighter as opposed to really heavy ones. And his decision-making process involved 4 steps, and I think you can apply this to just about any activity. It's called the OODA loop, O-O-D-A, and there are 4 steps. You observe what's happening around you. You orient yourself by making sense of what you have just observed and tying that in with who you are, your belief structure, your previous experiences, this type of a thing. And you actually allow some of that chaos that's going on to kind of become part of your mental system. And you put that all together, and then you blend this perspective, and you make a decision based upon what you have observed, and then finally you act upon that decision. And I think if a person takes these 4 steps, that they can really put themselves in the winner's circle, whether it's a combat aircraft or whether it's investing. It's a loop that I use and that I discuss at conferences, and I think it is something that is really worth our listeners' time to go study and see if it might fit them.
I was just thinking of the Canadian World War I ace, Billy Bishop, who always said, turn into the enemy, because that's where your guns are in the front of the plane. So if you're running away, you're just being shot at. This way, you can shoot at them. And because you're just one little target, they can only shoot at you one
right, and
plane
this
at a
is a
time.
metaphor for turning into their decision-making process. And Boyd believed that if you can make decisions more quickly than your opponent, then you will persevere. And so, in a sense, we're in a panic period in the market right now where the prices of the very best gold and silver mining stocks they're just collapsing, and people think they're going to go to zero. And so if you're the person that believes what you hear, that the bull market is over in the metals, then maybe you just need to sell and stand aside and go do something else. And there's nothing dishonorable about that. But, get in touch with yourself and ask yourself if that's what you really want to do. And I'm pretty uncomfortable right now, too, but I've looked at the big picture, and I believe it's still intact, and I think this is an opportunity to selectively go in and add to my positions, which I've done this morning, and to persevere and do it in a rational way, trying to control my emotions as much as possible. All of us have to deal with the emotions, and we have to do it counterintuitively. When we're fearful, that's when we need to buy, and when we're ebullient, that's when we need to sell some. And right now, we're all fearful. If anyone that says that they're not afraid, they're just not telling you the truth. But it's how you act upon that fear. Do you take it and use it as a productive energy so that you go from fear to something productive and survive? Or do you let it go across the board to panic, in which case you will be a deer in the headlight, you will freeze, you will dump your positions, you will do exactly the opposite of what you need to do, and then when the market turns around, you're going to feel really, really terrible.
Yeah, like Wellington said, staying alive is a matter of keeping your head when everybody else is losing theirs.
it's really true. And if you look at the greats, and we talked last week about the 5 giants, and some people wrote in and they suggested some other names like Doug Casey and several others, and they're all right. But we could have talked about the 15 giants, because it's not just 5, but those are the 5 to me that are really, really interesting, and maybe we'll do another one sometime with 5 more or 10 more. But the point is, this is one thing that you do, is you look at people who've been and done, and who have kept their emotions under control and gone ahead and done the right thing. And time after time, they've succeeded. And this is the way you survive, not fleeing over the cliff with the rest of the little critters that are panicking.
Stockholders and shareholders in companies, they're not taking this stuff lightly either. On business television today, a lot of talk about how CEOs of our major mining companies have been given their golden handshakes and shown the door.
That's really true. A lot of companies have lost a lot of money in the last few years for all sorts of reasons. Some of them tried to expand too fast, this type of a thing, or they overpaid for properties. The thing is, what we got going on now, I think it's almost irrelevant listening to the daily news, because all this information is supportive of lower prices. You're not going to hear anybody stepping up and saying this is the time to buy, at least not very often. And so when you listen to that, you become more panic-stricken rather than withdrawing from the fray, doing your own due diligence, asking yourself, do I believe the big picture is still intact? Does this fit my belief structure and my ability to handle things emotionally and my financial circumstances? And then acting upon that. You have to do that kind of off to the side. You can't do it in the midst of a big crowd, And so this is the type of thing that I'm going to be discussing. One of the main points I'm going to be making at a conference I'll be attending in April at the Resource Consultants Wealth Protection Conference in Phoenix. And this will be the 3rd year that I've been asked to speak there, and I really enjoy going there. It's a conference, a relatively small conference of about 200 people are able to attend that conference, and it's in Phoenix. And I'm going to be talking about the Boyd cycle, and I really believe that this is an opportunity for us to really get things really balanced out with our portfolios. And I'm not saying the bottom is in today or next week. It could go on for several weeks or several months, although I suspect that the worst of it will be over quicker than we think. And so the opportunity is to look at those prices and step in and make the purchase on the ones that you believe are the best of the best. It's not a time to buy junk. It's a time to buy ones that you believe are going to be best of breed when this turns around, perhaps violently to the upside like it did in 2008, 2009, and it will turn around.
A financial expert I talked to a while ago said people who watch the daily stock reports on TV, they don't give you, he said, well, it's very interesting. The market was up and down and oil did this, the dollar did that. But he said they don't tell you why and where things are going. So you just look at those numbers every day, and he says that's where the panic comes from. You don't see the rhythm of it or the reasons behind it and how you can take advantage of it. That's not explained. The news anchors come on, and I'm pretty sure half of them who announce those numbers have no idea, what the Dow means and the S&P index and so on. They just announce the numbers, but there's no explanation, and I think that's where the harm happens.
Well, and they don't have a sense of what's going on. They just parrot what they hear and what they see, what's going on right now. It'd be like if you and I and some other people were in a rowboat out in the ocean and it had a couple of leaks in it. We could discuss how big the leaks were and how the water's coming in and all this kind of stuff. That wouldn't help us to figure out a plan. And so, you look at people, whether it's in warfare or business or market meltdowns or whatever, we call heroes. And they're always ordinary people. They're people that take the fear response and they do something productive with it and they make it work out. And they don't know for sure that it's going to work, but you can't say, oh, I'm not going to act unless I know we'll survive. I'm not going to patch that hole in the boat unless I know it won't sink, because while you're doing that, the boat gets more water and eventually it will sink. So you must respond, and you want to do it in as calm a manner as possible. And I believe, I'm very uncomfortable today, but I'm telling you, I'm kind of looking at it with excitement, because I believe this is a test of my mettle and my belief structure and my ability to respond appropriately given what is out there. And so to me, it's a tremendous challenge, and I want to be a survivor, and I want to be there when these markets go to heights that people believe today are impossible, and I think we'll see that within the next few years. And to me, the worst thing that can happen, and this is just me, to me the worst thing that can happen is to be a spectator, to be watched, to leave and then watch what's going on and not be able to participate. And I believe many people now, if they're getting out in panic or they're not doing their research to make decisions, they will be taken out of the market and they will not come back in at all. This is a very serious correction, and it's not going to be the last one we see, but it's also one that has tremendous opportunity if you do your homework and control your emotions.
I think with your 4-point plan, observe, orient, decide, act, I think decision and act are almost the same thing. When Vancouver's public health officer, who's actually former Air Force, so a lot of this stuff applies, at his retirement dinner, he told all these student public health officers, he said, whenever a major crisis happens, whatever you do, make your decision and act on it right away. Do not sit around, because action, a plan, is better than nothing.
Right, and it takes you out of the victim mindset and into the survival mindset. And you know, the conference this year, each year they have a theme, and the theme this year is to create your own freedom. And I find that very, very compelling, because if you make your own decisions and you take responsibility for them, come what may, you are a free person. And I would rather make decisions that don't turn out, but still take responsibility for them and have that sense of freedom than to be someone who was timid and who relied on other people to make my decisions and then have me come up and be upset if they didn't work out. And we see this all the time. And I don't think that anybody can be successful in the markets or in life in general if they always want to fob off what happens to somebody else rather than taking responsibility for that decision. So it's exhilarating. It's a freedom type of a situation when you make that decision rather than having someone else make the decision for you. So I feel that this is a tremendous opportunity for growth for people that are willing to do that. And so that's my message.
And I think maybe, too, one of the messages you gave us in the past was that when things are happening like this and you make your decision and it didn't work out quite right, don't spank yourself for doing something that you thought was the right thing to do. Too many people do that.
That is correct, because you'll learn something from it. And, you know, I'd like to say, maybe in closing here, that there were two things that I learned from the meltdown in 2008, 2009, where everybody's account just went down in the pits, but then it turned around. There were people that literally committed suicide, having lost major amounts of money because they thought it would never come back. What I learned from that is that none of us expected it to drop as far as it did and keep going, and some of these prices went down. I mean, there was, for example, Silver Wheaton, the silver streaming company, went down to something like $3 a share or $1.90, something like that. And the darn thing went up to $42 18 months later. So, and it was across the board. I could give you hundreds of examples of that, of really quality companies that went to prices that you or I could never imagine would happen. And what I learned from that was two things. Number one, when we get into a decline like this, if I'm going to do buying, I want to buy in bigger price increments. In other words, instead of buying a major gold producer in $2 or $3 increments, I want to buy in $5 or $8 or $10 increments. And I might not get filled on those, but you know what? I won't run out of money before I get to the bottom, because I'll be buying in bigger price blocks because we have a bigger volatility going on than normal. And what I did then, I bought in smaller blocks rather than making a bigger price drop to buy more. And so also, I kind of ran out of money before the end. I added appropriately, but I also didn't save a reserve for what we call stupid cheap prices. And so I ended up with no money left, and I had all these positions, and it turned out really well. It took a while. 6 months later, I was back in new high ground. But if I had kept a reserve for prices that I thought were impossible to reach, some of those, when they were there, I would have had the money, and I believe I would have had the courage to go buy in. There was one stock that had traded at $22. I saw it at 35 cents in late 2008. That stock proceeded to turn around and go to $14, but within the next year. And that was a 40 times your money. Could you imagine $500, $1,000 buying that stock and $1,000 turning into $40,000 because you had that money, a little bit of money, and the courage to buy a product that you didn't think was going off the board for a stupid cheap price. Whether we'll get down into that thing again, I don't know, but it's very possible. But I do think that we're going to come out of this hole when it's out, and the people that did some of the things we discussed today, I think are going to be very happy and proud of themselves. But this is an individual decision. This is what I'm doing. People have to decide for themselves, and that's just what it is.
Well, I know if you stay with your plan, it's interesting how well it works out. My wife is a very conservative investor. I'm a pretty risky guy. I like to see big numbers happen. The recession hits, both our portfolios take a big hit. We don't panic. We don't do any panic selling or anything like that. 3 years later, both our portfolios were exactly at the same place they were when this financial crisis hit. And we had two very diverse, investment plans and ideas, and how they both converged at the same time. So it seems like if you have a plan and you think it's a good plan, stick with it. Good things will happen.
That's really true. And Pat Gorman, who is the inspiration for these conferences, I think this is like the 16th or 17th year that they've had the Wealth Protection Conference, he always said, plan your work and work your plan, and education before acquisition, and accept personal responsibility. And if you do those things, I think no matter how things turn out over the intermediate term, I do believe they'll turn out well over the longer term, and even the intermediate term, but no matter what happens, you will say, you know what, I did my very best, I was calm and rational, and I applied valid techniques, and I'm proud of what I did.
Yeah, it's sort of like a high-scoring Super Bowl. One of the teams may, quote, lose, but if one scored 48 points and you scored 45, and if those were investments, you both ended up winners.
That's really true. That's really true.
David, great show. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio, and you can get a hold of us at info@HoweStreet.com. I'm Jim Goddard.